Welcome back, deep divers. Today, we're diving headfirst into the world of banking.
Ooh, banking.
Yeah. Specifically, two major players that have caught the eye of none other than Warren Buffett,
Okay.
Bank of America and Ally Financial.
Interesting.
And, even as he's been scaling back on bank stocks recently, he's held on to big, substantial stakes in both of these companies.
Yeah. It makes you wonder what he sees in them.
Yeah, what does he see? And maybe more importantly for us, which one might be a better fit for our own portfolios, if we're thinking about investing.
Right.
So to kind of figure that out, we need to understand each bank's story, right? Like where they came from, where they are now.
Yeah.
Let's start with Bank of America.
Okay.
They've had a pretty incredible journey, especially when you consider that they were almost taken down during the 2008 financial crisis.
Oh, yeah, for sure. Their recovery is really a testament to their resilience, right? And some smart decision making.
Yeah.
Buffett's involvement with Bank of America actually started during that time, right? During the crisis.
Oh, really?
Yeah. He saw an opportunity and swooped in with a $5 billion lifeline.
Wow.
It wasn't just an investment. It was a vote of confidence that really helped restore market trust in the bank.
It's like a stamp of approval. You're right.
Exactly.
And that confidence seems to have paid off, right? Because they've grown into this behemoth with over $1.92 trillion in deposits and more than $1 trillion in loans.
Yeah, they are massive.
Huge. But size isn't everything, right?
Yeah.
What about their performance for investors? Like, have they been good to their shareholders?
Well, they've been remarkably consistent in creating shareholder value, not just through growth, but also by paying dividends and buying back their own stock.
Okay.
That steady performance, I think, is a hallmark of what makes them attractive to a long-term investor like Buffett.
Yeah, that makes sense. Okay, so we've got, they're big, they're stable, they're shareholder friendly. But what about the current economic climate? There's been some talk about pressure on their interest margins due to rising deposit costs.
Yeah.
What does that even mean? And what does that mean for their future profitability?
Sure, yeah. Interest margin, you can think about it as, in simple terms, it's the difference between the interest a bank earns on its loans and what it pays out on deposits.
Okay.
So when deposit costs rise, that margin shrinks.
Okay.
Which can potentially squeeze their profits.
Right. So that could be a challenge for them going forward.
Yeah, definitely something to watch.
But hasn't there also been talk of the Fed cutting interest rates?
Yeah.
Could that help Bank of America?
Potentially, yeah. That's the interesting part, right? While rising deposit costs have been a concern, the potential for a Fed rate-cutting cycle could actually benefit Bank of America.
Okay.
Lower rates would likely ease the pressure on their margins, potentially boosting their profitability.
Interesting. So it's not all doom and gloom.
No, not at all.
And there's another point in their favor, right? Their charge-off rates, the percentage of loans they don't expect to be repaid, those have remained quite stable compared to some other banks, right?
Yeah, that's a good sign. It suggests they've been effective at managing risk in their lending practices.
Yeah.
Which is crucial for any financial institution.
Right, especially in uncertain times.
Exactly.
Makes sense. Okay, so we've got a picture of Bank of America.
Yeah.
A giant. They weathered storms, they delivered consistent returns for investors, and they have a relatively stable charge-off rate.
Right.
Now let's switch gears a little bit, talk about Ally Financial.
Okay.
Completely different background, right?
Totally. Coming from the world of auto loans?
Yeah.
Spun off from General Motors?
Exactly. They started with a focus on auto financing, but they've evolved into a full-fledged online bank.
Yeah. And, this online-only model allows them to offer some advantages that traditional banks like Bank of America might struggle to match.
Like what? What makes their model so different?
Well, for one, their online structure means lower overhead costs.
Okay.
That allows them to offer more competitive rates to customers and potentially generate higher returns for investors.
Oh, I see.
Also much more nimble and adaptable. They can quickly adjust to market changes and seize new opportunities.
Oh, okay. So they're leaner and more agile.
Yeah.
But what about their focus on auto loans? I mean, isn't that a bit niche compared to a traditional bank's diverse portfolio?
It might seem that way at first, but auto loans actually have a few key advantages. They tend to carry higher interest rates than mortgages or other types of loans, which can translate into better yields for the bank. And even though their borrowers have pretty good credit scores, Ally has been able to maintain impressive yields.
Wait, really? Even with borrowers who have good credit, their loan yields are high.
Yeah. Their average loan yield in the latest quarter was 10.5%.
Wow.
And the average FICO score for their borrowers was 710, which is considered, quite good. This suggests they found a way to manage risk effectively within this specific market while, maximizing their returns.
That's incredible. 10.5%.
Yeah.
That's way more than what I'm getting on my savings account. What's their secret?
Well, part of it is their deep understanding of the auto lending market, but it also comes down to their ability to, efficiently assess risk and price loans accordingly.
Yeah. Okay. So while their focus might seem narrow, they're clearly doing something right.
Yeah, they are.
And just like we talked about with Bank of America, wouldn't Ally also potentially benefit from the Fed cutting rates?
Absolutely. In fact, it could be even more beneficial for Ally. Lower interest rates would mean lower cost for them to attract deposits, which would lead to even wider interest margins and potentially greater profitability.
Yeah, okay. You mentioned margins before, right? What are they currently at, and what are they projecting for the future?
Right now, Ally boasts a strong net interest margin of 3.22%, which is already quite good. But here's the kicker. They believe they can reach 4% in the medium term.
Wow, that's a big jump.
Yeah.
And to think they're accomplishing all of this while operating entirely online. They're really challenging the traditional banking model.
They certainly are.
So we've got these two banking giants, both with their own strength, potential challenges. But how do they stack up against each other? And what does all this mean for us, the investors?
That's where things get really interesting, and that's what we're going to dive into next.
Ooh, stay tuned, folks, because we're about to get into the heart of this comparison.
Yeah, the head-to-head matchup,
Exactly.
Bank of America versus Ally.
All right, we'll be right back after a short break. Okay, so let's dig a little deeper into this comparison between Bank of America and Ally Financial. I mean, we've laid out, kind of the basics.
Yeah, the groundwork.
But now it's time to really get into, the nitty-gritty.
Yeah, we're putting these two banking giants under a microscope, right?
Yeah.
We know, Buffett sees something valuable in both, but they're just such different beasts.
Yeah.
Bank of America is that classic established player.
Yeah.
And Ally is the agile newcomer kind of shaking things up.
Yeah. It's almost like two different philosophies of banking battling it out for the future, right?
Yeah, that's a great way to put it.
On the one hand, you have Bank of America, massive size, diverse portfolio, history of weathering economic storms,
Right.
It just seems to embody that classic Buffett value investing approach, focusing on, solid, well-managed companies with long-term potential.
Exactly. Bank of America represents stability,
Yep.
consistency. They've proven that they can navigate these challenging economic conditions and still deliver value to their shareholders.
Yeah.
And their size gives them certain advantages, right? Like access to capital, a wider customer base.
For sure. And then there's Ally taking a totally different approach, right? They're lean, they're tech savvy, they're laser focused on specific markets like auto lending. And it seems like they really embrace innovation and they're willing to kind of take those calculated risks to achieve higher growth.
And that's where things get really interesting because even though Buffett is renowned for his value investing approach, he's not averse to companies with a bit more growth potential.
All right.
Right.
Yeah.
And I think Ally's digital-first model, their higher loan yields, their ability to adapt quickly to changing market conditions, those are all attractive qualities for an investor looking for that potential upside.
So maybe what makes both of these banks appealing to someone like Buffett is how they complement each other.
Yeah.
Right? Bank of America provides that solid foundation, steady returns. And then Ally offers the potential for that, more explosive growth.
Right. It's like a balanced portfolio within a portfolio.
Yeah, exactly. And it really highlights a crucial point for any investor, right? Diversification.
Yep.
Even within a sector like banking, it can be beneficial to have exposure to companies with different strengths and risk profiles, right? It's all about spreading your bets and not putting all your eggs in one basket, or however that saying goes.
Exactly.
So for our listener who's trying to figure out, which bank might be a better fit, I mean, it really comes down to their own like individual risk tolerance
Right.
and investment goals.
Absolutely. I mean, let's say you're someone who prioritizes stability and consistent returns.
Mm-hmm.
Yeah, you're not looking to get rich quick. You're in it for the long haul. You want a company that's going to weather economic storms and consistently pay those dividends.
Yeah, then Bank of America seems like a perfect fit.
Yeah, they're not going to give you those wild swings in stock price, but they're likely to deliver that steady growth over time.
Makes sense. But what if you're, what if you're more comfortable with volatility? What if you're seeking those higher potential returns, and you're okay with riding out those ups and downs of the market?
That alley might be more your speed.
Yeah.
They could be a home run,
Yeah.
but there's also a higher chance of a strikeout.
Right. It all comes down to, your investment personality and aligning your choices with your goals.
Exactly. There's no right or wrong answer here.
I think what's really cool about this whole deep dive is it's not just about picking stocks, right?
Yeah.
It's about understanding this bigger picture of the financial world.
Mm-hmm.
We're seeing the evolution of banking right before our eyes. We've got the traditional institutions like Bank of America adapting to these new challenges.
Mm-hmm.
And then you've got these online disruptors like Ally really pushing the boundaries.
You hit the nail on the head. This is about understanding the forces that are shaping the future of finance.
Yeah.
And for our listener, that means asking those fundamental questions.
Yeah.
Like, how comfortable are you with online-only banking?
Right.
Do you value the personal relationships and physical branches that a traditional bank offers?
Those are really important questions, especially as the lines between traditional and online banking, continue to blur.
Yeah.
It's not just about convenience. It's about how these different models assess risk, manage interest rates, and ultimately how they create value for customers and investors.
And as technology continues to evolve, I mean, at this incredible pace,
Yeah.
it's going to be fascinating to see how these two models adapt and compete.
Yeah.
Will traditional banks fully embrace the digital realm? Will online banks find ways to offer more personalized services and build those deeper relationships with their customers?
Those are the kinds of questions that I find so exciting.
Yeah.
The world of finance is constantly evolving, and that uncertainty makes it so captivating.
And it's that curiosity, that desire to understand the complexities and nuances that makes you, our listener, such an ideal deep diver.
Speaking of diving deeper, I think we need to take a closer look at one specific area that could impact both of these banks.
Okay.
The rise of electric vehicles and the potential implications for auto lending.
Absolutely. The EV revolution is already shaking things up, and it's likely to have a profound impact on the future of auto loans.
Huge.
Yeah, especially for, Ally, who's so heavily invested in that market. It could be a game changer.
Yeah. All right, so let's buckle up and get ready to explore this fascinating intersection of banking and the EV revolution. Okay, so we've covered a lot of ground here talking about Bank of America and Ally Financial. We've talked about, their different business models, their strengths, their potential weaknesses, and how they kind of fit into, this whole world of banking.
Yeah. We've really kind of dissected these two banking giants.
Mm-hmm.
And through it all, I keep coming back to this one question.
Yeah.
What does Warren Buffett, the master of long-term value investing, what does he see in both of these companies?
Yeah.
Especially Ally, with its focus on a seemingly niche market and its potential for volatility.
Yeah, that's the $1 million question, isn't it?
Yeah.
It seems like a little bit of a head scratcher. I mean, Buffett's the guy who famously said, "Be fearful when others are greedy and greedy when others are fearful."
Right.
And then he invests in a company that's, so closely tied to the auto loan market. It feels a little counterintuitive.
Yeah, it does. But you got to remember, Buffett is also incredibly adaptable and forward-thinking, right? He's not afraid to evolve his strategies as the world changes.
Mm-hmm.
And I think that's what we're seeing here.
Oh.
He recognizes that the auto industry is undergoing a massive transformation with the rise of EVs, and that transformation is going to ripple throughout the financial sector.
So you're saying Buffett isn't betting on, like, the past of auto loans,
Right.
but on the future of how people will finance electric vehicles.
Exactly. Think about it. The EV revolution is still in its early stages, but it's already disrupting the traditional car market.
Yeah, for sure.
As more and more consumers make the switch to electric, the demand for auto loans is going to shift as well.
That makes sense. But how does that specifically benefit a company like Ally?
Well, for one thing, Ally's already a major player in the auto finance market.
Yeah.
They have the infrastructure, the expertise, and the relationships with dealerships to capitalize on this shift towards electric vehicles.
So they're well positioned to like ride that EV wave.
Exactly. And here's where it gets even more interesting. EV financing comes with its own unique set of opportunities and challenges.
Okay.
That traditional banks might not be fully equipped to handle.
Like what makes it so different?
Well, for one, EVs are generally more expensive than traditional gasoline-powered cars.
Okay.
So that means larger loan amounts, potentially longer loan terms.
Yeah.
A different set of risk factors for lenders to consider.
Yeah, the whole calculation changes.
Yeah.
And I imagine there are also new considerations around like battery life, right?
Mm-hmm.
Depreciation rates, the availability of charging infrastructure.
Absolutely.
Okay.
These are all factors that that Ally, with its deep understanding of the auto market and its flexible online platform, is better positioned to adapt to compared to a traditional bank.
Right.
That's more entrenched in older models of car financing.
Okay, I'm starting to see how Buffett might be seeing this. He's not just betting on Ally because of their current success with auto loans.
Right.
He's betting on their ability to evolve and thrive as the market kind of shifts towards EVs.
And that's where Ally's agility and tech savviness really come into play.
Yeah.
They can quickly adapt their lending models, their risk assessment algorithms, their customer interface to cater to the specific needs of EV buyers.
Yeah, it's like they're a speedboat navigating a changing river.
Yeah.
While the traditional banks are like these giant ships trying to turn around.
That's a great analogy.
Yeah.
And let's not forget about the other piece of this puzzle.
Yeah.
Government incentives and tax credits for EVs.
Right.
Those incentives can significantly impact financing decisions and create new opportunities for lenders who understand how to leverage them.
Oh, that's right. I remember reading that there are like substantial federal tax credits available for EV purchases. I mean, that could definitely sweeten the deal for borrowers.
Yeah.
Potentially create even more demand for loans.
Exactly. And guess who's well positioned to help customers navigate those complex incentive programs?
Ally.
With its digital platform and its focus on, providing that seamless customer experience.
So it's not just about the cars themselves. It's about like understanding the entire ecosystem surrounding EVs, from the technology to the financing to those government incentives.
Exactly. And that's where Ally, with its entrepreneurial spirit and its laser focus on specific markets, might have an edge over the more diversified but perhaps slower moving traditional banks.
Okay, I'm starting to get a much clearer picture of what Buffett might be seeing. He's investing in Ally's ability to be a leader in the future of auto financing, a future that's increasingly electric.
It's a brilliant strategy, really.
Yeah.
He's recognizing a major trend. He's identifying a company that's well positioned to capitalize on that trend. And he's making a bet that their agility and expertise will pay off in the long run.
Yeah. It's a reminder that investing isn't just about, looking at the current numbers.
Yeah.
It's about anticipating future trends,
I know.
identifying the companies that will thrive in those new landscapes.
And for our listener, I think this deep dive highlights the importance of staying informed about the forces that are shaping the world around us.
Yeah.
The EV revolution is just one example of how technology is disrupting industries and creating both opportunities and challenges for investors.
Yeah, it's a reminder that we need to be constantly learning, adapting, and evolving our own investment strategies to stay ahead of a curve.
Couldn't agree more. The world of finance is dynamic. It's ever-changing, and that's what makes it so fascinating.
All right, so as we wrap up our deep dive into Bank of America and Ally Financial, I want to leave you with a final thought to ponder. What other industries are poised for disruption in the coming years? And what companies are positioning themselves to lead those transformations?
Great questions. Keep those questions in mind, as you continue your own deep dives into the world of investing, because the more you know, the better equipped you'll be to navigate this exciting and ever-evolving world of finance.
And that's a wrap for today's Deep Dive. We hope you enjoyed exploring the world of banking with us and that you've gained some valuable insights into, these two fascinating companies and the broader trends shaping the future of finance.
Remember, knowledge is power, especially in the world of investing. Keep asking those tough questions. Keep exploring those different perspectives.
Yeah.
And keep diving deep.
Until next time, happy investing.